27 March 2023, Monday. Welcome back, guys. MAO with Kel once again. Now, Credit Suisse and Deutsche Bank were in my list. Remember that 5 months ago? I was calling for them. I said that Credit Suisse definitely will be going down soon, and next could be Deutsche Bank. And incredibly, both of them now in the list, and apparently there's someone else, okay? In fact, not one, but potentially two. If you look at my background, you will see it. Okay, let's go. Now, the thing is this, thank you once again for you guys, all the contribution. We did the spin the wheel lunch with Kel, and about 4 of you guys have been selected for it. So thank you. We have already left you the contact person, which is Susan. Please contact her with the phone number that are given to you on your YouTube message now. Do that. Do us a favor. Contact Susan so we can rearrange for you. I'll see you guys on Wednesday. For the rest of you guys who missed it, no worry. From today onwards, from today until next Friday, the next 10 working days, continue to watch my video and then leave a comment that's related to the market, to the video that you watch, and then we will pick you for the next restaurant trip. Okay, that means that we'll be having the next restaurant trip is about 2 weeks from now. Okay, all right, thank you very much once again. Now, okay, I think there is some PowerPoint issue here. Does it matter? Okay, all right, once again, guys, disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. Okay, so let's just look at it again. All right, I think some really got some PowerPoint issue. Just give me a moment. Something to fix it over here. Okay, just give me a moment. Oh, what happened here today? Okay. All right, so let's recap what happened last Friday. Okay, so first of all, the Dow Jones recovered 132 points. Well, majority of it because of Microsoft, Apple, Meta was up. All right. Surprisingly, Google was down. Okay. Amazon was down too. All right. The main thing that caught my attention was BAC. All right. Now, this BAC is by America. I believe that this company may have a problem. I'll talk about this later on. All right. So let's recap what happened. So basically on Friday, investors will shake off the latest bank fear. That's the reason why people are turning bullish right now. There are people who say that, look, the NASDAQ up by 1.7% last week. The S&P up by 1.4 and the Dow up by 1.2. So last week was one of the week whereby we have crater of many bank shares. We have share price really plunging, but you can see from the chart itself, the recovery is incredible, right? Really incredible. So what's the reason? Is it because the market is genuinely bullish or the worst is over? Well, I have my reservation. I'll tell you more in detail, but nonetheless, right, we can still see that a lot of banks like First Republic, PacWest, they're all being hit. And of course, because of the outflow from a small bank, right, all the bigger giants like JP Morgan and Wells Fargo technically has benefited from all the deposit. But for Wells Fargo, I have my reservation too. So I'll talk about this also later. Now, we all know that the US authorities are considering to expand their emergency lending program for the banks so that they get more time to shore up their liquidity. But I say once again, like, this is going to be, I think this 30 billion will run out very soon. And I think that one should be very careful. Now, we all know that both Janet Yellen and this Jerome Powell, both of them are trying to play the good cop, bad cop thingy to stabilize the banking system, right? We all know that the Federal Reserve can sacrifice everybody, but it cannot let go of the banking side, because if banking goes down, the whole entire economy goes down. So we all know that right now, that Deutsche Bank, all right, has a bit of problem here because the investors sold off the US listed shares after the German lender credit default swap, right, hit a high level, okay? And that immediately caused the stock to be down by 5.5%. And of course, remember, we also saw that happening in this Credit Suisse earlier this month. So is it is it a common thing that the Credit Suisse default swap where they shoot up first, then the bank share get hit? It is potentially happening right now, and I'll tell you more in detail very shortly. So first of all, oops, again, I think really got some issue in PowerPoint. I think I didn't save the last slide. Okay, never mind. I also apologize on this. Okay, guys, if you remember, 5 months ago, I already, on the 4th of October, I have already mentioned regarding about both banks, which is Credit Suisse and this Deutsche Bank. You see over here as well, Credit Suisse and Deutsche Bank. And that was 5 months ago, okay? And I said that there's a possibility to see a Lehman 2.0. And back then as well, many people were laughing at me and said that this is crazy, this is absurd. But guys, it's really happening right now. So let's watch a quick video on this about what happened over here itself. Let's go on this particular video about this Credit Suisse fall and the impact of Deutsche Bank. Okay, let's go. Okay, let me just play it up.
The European markets are closing for the day. Let's get to CNBC's Arabile Gumede live in our London newsroom with more. Arabile.
Yeah, so markets have certainly gone down today, hit a lot by the banking stocks. Of course, Deutsche Bank certainly in focus. It does follow on from the saga we have seen across the globe, particularly from the US, having seen Signature, Silver Bank, and all the others. But Deutsche Bank certainly in key focus today, does follow on from yesterday's big jump then in the CDSs that we saw, which kind of gave no apparent clear reason for that spike in those CDSs, but that number jumping up, increasing fears of where Deutsche Bank certainly might be. We saw that stock even fall down as much as 14% today, if not just a little bit more. By the end of trade, however, around 8% weaker, 8.6% weaker by the end of the closing, the trading day there, around 5% weaker with the banking stocks overall too. So they clearly had an overall weakness. The sentiment is worrisome around banking stocks as to where exactly do they currently sit. Of course, the key sentiments have been that with enough liquidity in the market, those banking stocks should actually be fine. But the general read across the board does show that there is some fear. European leaders have also been at a summit today, then also just sharing some sentiments. The German Chancellor Olaf Scholz even speaking about how the Deutsche Bank is a profitable business with no reasons for concern. So clearly, markets still feeling the pinch, but regulators seemingly unperturbed too much by the saga that is currently happening in the market.
So as usual, regulators are always saying, yeah, nothing happened, all is good, all is good, all is good. When the last time you see a regulator coming in and say that all is bad? Okay. Anyway, this is what happened now, guys. Look at the credit default swap. Oh my goodness, it shoot up such an incredible level. Now, the last time we see something like this was back in 2020 during the pandemic time. So we all know that what happened after that, the stock actually came off quite a fair bit. Then if you go back all the way, the last time we saw it was 2016, where Federal Reserve was basically doing the QT. So it seems to be that we're going to see the same thing again. And because of that, right, we have with the stock price actually came off quite a fair bit, yeah? So the credit default swap seemingly is a very important element right now. And where the money goes, right? So apparently now, the last 2 weeks, there's an increase of outstanding US money market funds. Because why? Basically, all the money are going to the money market. So why? Because the yields is better. Why put in the stock whereby it's uncertainty? Why put into other markets? So that's why the money market now are really flush with money. And of course, with Federal Reserve not really have any intention to cut interest rate, this will likely be the best place to put their money, right? Think about this. So, well, the question is the bank safe? Well, about $100 billion in deposit pulled from the banks has entered the money market, apparently, or at least they got somewhere else. And the thing is this, the officials are saying that, well, after the Financial Stability Oversight Council, okay, that was the last Friday, they came out and insist that the system remains sound and resilient. Okay, fine, that's good. But then why is Morgan Stanley asking us to sell in the rallies? So the question is this, one of the bigger boy, Morgan Stanley, says that, you know what, we just had to be careful with the sudden rallies. But the thing is that, isn't it safe? So the question now is this, why is the market still holding up? Well, let me explain this to you. Very simple. Because first of all, Microsoft was used to save the day. Apparently, Microsoft was up 6% since the start of SVB downfall. And practically, it's all right. This company has lost, added in about $240 billion in this market value since that date. Why? Because basically the boys utilize all the growth stock like the technology to pump and pump and pump so that the index looks good. If not, right, if the bank shares down by 24%, definitely the S&P will down by at least 10%. But because they move around creatively to buy into the technology companies, that's why it's holding up. So the question is now, will the October low hold? So there are a lot of bets on this, but we all know that only 60% of the S&P members are positive over the last 6 months, even though the index at the same period is up by 7.5%. So it's only because the rest, the main thing is because of the selected few ones that are heavyweight, they're one being holding up the market. If not itself, the market could have broke October low long time ago. So the thing is this, an interesting history of October low and the successful February-March retest in 2002, 2008, and the so-called less dramatic degree 2015. So it does seem to repeat. So it is a possibility that the October low could be taken out. So that is whereby I will want you to take a look at this chart here. Now, this is from Michael Burry. He did it to just basically snap the market. But there's one company that caught my attention, and this company is right here, and that's BAC. Now, we all know that the company like First Republic, these companies and USB are all down. So if you ask me, the nearest now towards it itself is this two, okay? Wells Fargo and BAC. And that's the reason why I'm watching at them very, very closely, because you look at it right now, this was a thing done by some of the retailers. They're saying that, okay, which bank been hit? And we can see that the last time was Credit Suisse, but the updated version now, as you can see, that is in the list is now Deutsche Bank. Can you see that? So the next one, in my opinion, okay, should be Bank of America, if not Wells Fargo, right? Where's Wells Fargo? Right here, okay? All right, so that is my view, yeah? Okay, so let's see whether what do I have to you for you so that you can see from my point. Now, first of all, let's go some understand about Bank of America. Now, Bank of America doesn't belong to America, so you must understand this, okay? All right, it's basically a second largest banking institution in United States. So it doesn't belong to the United States. It's like after JP Morgan Chase, okay? So because of that, right, okay, they are definitely one of the top few companies. So for you to think that they'll go down, it shouldn't be possible. Well, let's look at the recent balance sheet, okay? They have basically prepared a provision of $1.1 billion credit losses. Okay, still not too bad, still decent. But the main thing is this, they have average loan, it's very important, yeah? The average loan and lease balance is about $1 trillion to strong commercial loan growth, okay? But still $1 trillion. So all I can say is this is not a good sign, and deposit has been going down. So these are the few reasons why I'm pretty concerned with this company. But more important thing is that when I did a BAC credit default swap Google, I noticed that, hey, not too bad, right? Get to see a few things. So I click on them itself, right, to find out more exactly, because I want to find out, right, when I go on CNBC, I was just about to ready to watch it. Damn, apparently they say that the page that you cannot find cannot be found. Okay, wait a minute. I mean, what's so difficult, right? They just had to show it. Then why are they holding back? That's a good question. So what I did is I digged further and get the one closest to it from Asset Macro. Well, we can see that the last time we see the number went past 100 was back in 2020 during pandemic time, and of course the share price did came off a fair bit, right? So now if you look at the screen, you can see that actually the number is actually moving up right now. So this actually speaks for itself that why am I concerned, and of course more importantly why the share is behaving like this. Take a look, guys. Does this look at a company that is the number 4 in the world, top 4 in the world, that the share price is coming down so much? The last time was here when it was holding at $34. Now he break below the 2 moving average and now trading at $27 right now. Now, basically, if this will continue, in my opinion, I think that there's a good chance we can see going down to $24, okay? Now, of course, it's near the very, very oversold region. So I'm not half surprised to see some rebound. But if you ask me, right, there's a good chance we can see $24 in the near term. And let's see whether I'll be right, yeah? The next company in my mind is Wells Fargo. So same thing again, I couldn't find much on it, but when I go do this macro assets, I can see that it's very clear that the numbers is moving up. So when number moves up for credit default swaps, we all know that this is not a good sign. And if that's the case itself, right, one must be very, very careful. So we look at Wells Fargo chart, you can see that it's almost identical to all the bank sector company. So basically it was at $45, $46 at one stage. Then we lost the moving average itself, down to 36. And I believe that we will see 34 in the near term, okay, 34. All right, so all this basically tells me that these two companies we need to watch closer because of their so-called involvement. And all I can say is this, hopefully they don't get in trouble, because if they do that, right, things can get very, very bad, okay? And that is all for today. I try to make my video short as possible so that you can actually enjoy this. The next video might be coming out later in the evening or tomorrow morning. All right, guys, I'll see you on the technical side. This is Cal signing off. Bye-bye.